What's up, Mortgage Coach community? Coming to you live with Justin Brown. My name is Dave Savage. I'm coming live out of Portland. Justin, where are you at right now, bro?
I'm in Claremont, Southern California, LA County.
LA County, so a little north of LA?
Yeah.
Right on.
A little east of LA. Or, yeah.
Yeah, I get it. Like so you are killing it, brother. And I love how you're not only using Mortgage Coach Super Smart and I love how you're using strategies to build your Instagram strategy, but I also love how you're using the integrations. So I want to cover both how to use a Mortgage Coach to be more effective, more faster and more efficient. And then also, how did you do this with Instagram? There's not a lot of loan officers with almost 30,000 followers. So I want to get into that a little bit. Is that good?
Yeah, for sure.
And then it does look like the everything is surrounded with, I'm an advisor, I'm doing education on fiscal literacy, and that's just making you more attractive and you're getting leads and you're doing branding around it. Is that right?
Yeah, definitely.
Okay, well, let's start with how much volume are you doing right now? What's your estimated production on a monthly basis?
This year, I'm hitting about 20 units. My loan size has gone up. So about 10 million a month, I think is what I'm doing this year. Last year, I think I did about 130 something million and 340 units, something like that.
Congrats. And what is your goal this year?
Hit about 110, 120 mil. I'd be super happy with.
Good. Well, I think everybody would be pretty happy with that kind of production.
Yeah.
Especially given that the market's changed quite a bit.
Yeah.
What about your practice? I mean, obviously refis are down, but what is the mix of purchase versus refi for you this year so far?
So this year so far, I'm probably 45% purchase, 50% purchase. I'm starting to trend up on my purchase production and trending down on the refi production. Last year I was heavy refis. I jumped into my database and killed it. But I knew it was going to change. So I started focusing on marketing and trying to go consumer direct because I've been doing this 20 years and, I've had years where I have great refi years, great purchase years. I know how to turn that switch. I know what to do to go pick up purchase volume. But my goal was, when this does slow down, I don't want to have to go call 100 realtors a day anymore. I don't want to have to, jump through hoops nights and weekends anymore. So I'm going to focus on consumer direct. And honestly, even if business slows down for a year, while I focus on this channel, it's worth the sacrifice to me. So thankfully, we're still doing good, closing, good volume and everything. I'm super happy with it. But on the flip side, I was giving myself a year or two to see some momentum with this consumer direct social media stuff. And it just took off pretty quick. So it's given me even more like passion and just my like that's my whole focus now is I'm going to keep growing this and I'm going to build some funnels and channels to just drive in heavy business from consumer direct is my goal.
Well, if I recall, I've interviewed you before and you've always done a great job with your past customers. Yeah. And that's always been a significant pillar of your business. You provide a Mortgage Coach report. Folks, this man is a 5th degree red belt. He's done 4,498 total cost analysis. Just in the last 30 days, 39 of them were manual, where you or your team created them manually, and 31 of them were automated. So I think you're using a combination of the Jungo integration and the HomeBot integration. Is that right?
Yeah.
Yeah. So working smart, but as this pivot has taken place, you're saying, hey, I'll have some select realtor relationships, but I don't want that to be my main pillar. It sounds like past customers, consumer direct, realtors. Is that the priority? Like 1, 2, 3?
Yeah. And my goal would be to turn consumer direct into the primary pillar.
The number one pillar.
Yeah. Cause you could scale that on any level. There's no limit at that point if you learn how to do it.
Well, my only push for you on that is if you always keep your past customers your number one priority, one, you're going to always resource it. So you're optimizing it. It's like a snowball rolling down the hill.
Yeah.
And then 2, if you have a great past customer, I'm doing an annual review, I'm doing a great point of sale, now you've got a competitive advantage on your consumer direct. So it's
Oh
like,
yeah.
it's that client for life process
Yeah.
is your ultimate value prop.
And that'll never change. It's just the volume of business I get.
Fair enough.
I want to exceed, but every one of those clients, whether they're consumer direct or past client, when they enter my past client life, or picture, that whole experience, definitely VIP treatment, gifts, annual reviews, all of that stuff.
So let's break down. I mean, everybody talks about tech stack all the time. What's your tech stack? Yeah. Let's talk about your social media stack. So what are you doing? I mean, I called out that you're at 29, almost 30,000. I mean, looks like you'll be at 30,000 followers on Instagram in no time.
Yeah.
What other social media channels are you using?
TikTok and YouTube. My goal was actually to grow on YouTube this year, and that's been slow. But then somebody recommended TikTok, and I was like, really? I don't know. So I tried a couple of videos on there, and it started working. And then it carried over into repurposing that content on Instagram, which has done really well. And then now I'm starting to try and use Pinterest, repurposing. I'm not creating new content for Pinterest. I'm just sharing it there, doing my hashtags and descriptions and stuff, because I heard that'll help push traffic back to those channels. With YouTube, I have to create separate content, which makes it a little harder because YouTube is a little bit more 2 to 5 minute style videos, where with Instagram and TikTok, just 30 seconds. I'm
really 30 seconds.
Quick. Yeah. And that does well, short attention spans,
Yeah. What about Facebook?
I do push all the same stuff to Facebook. I'll post a video on Instagram and get 100,000 views on an awesome one, and then on Facebook I'll get 2 likes and 60 views. So I'm not, I'm still putting stuff on Facebook that I post on Instagram, but I'm not really, expecting anything to grow from it.
So it sounds like you started the year from a social media standpoint, YouTube first, Instagram second, TikTok third, Facebook.
None of that. It was really just YouTube first, and once I figure out YouTube, I'll start looking at Instagram. So you interviewed that gentleman who did the 1 million followers. I actually
I was just going to call out. Have you read this book yet?
Not Hook Point, but I did sign up for the 1 million followers course the beginning of the year. I've been doing everything, like Billie Jean marketing courses. I took his 1 million followers course. I have a YouTube coach. Like, I'm all in trying to learn this stuff, because my whole thing is, if you could learn marketing really, really well and be an expert at marketing, you're never going to go without business.
If you kill it at marketing and you kill it with past customers, you will always have a seat at the table. You have, who cares if Amazon Mortgage ever happens?
They take over, it won't matter.
You'll always have a seat at the table if you can market and own your customer base. I align with that. By the way, I recommend this book. I interviewed Brandon last week. Yeah. So did you watch that interview?
I watched the whole thing. It was awesome. I'm going to rewatch it. I'm going to read that book.
It was like pretty badass for 30 minutes. I mean,
I loved it.
I had Renee Rodriguez with me. So you had Renee and I tag teaming Brendan Kane. Guys, check it out. Yeah. Get the book. And whether you want to go consumer first or not, we live in an ADD world. And you need to know the art and science of getting attention in 3 seconds.
Yeah. Whether you're going after realtors or consumers, you got to know. Yeah. If you know marketing, you're going to crush it.
Yeah. Well, we align on that. Well, that's cool to know that you check that out. So let's get into how you're using Mortgage Coach, how it's helping power some of the strategies that are part of your content. One last question. Did you ever check out that artificial intelligence writing program that I've been promoting? It's called, if you go to Dave Savage AI. Have you gone to Dave Savage AI yet?
No, I've never even heard of it.
Okay, well, type it in. I signed up about a month ago. In all full disclosure, guys, I am an influencer for this company. Just go davesavage.ai and you'll check it out. But it's super legit, artificial intelligence driven writing app. So it'll help you with your headlines. Okay. It'll help you with your marketing content. I would say that literally since I started using this platform, almost every social media post, I'm like, kind of like really quick. Here's a quick headline. Here's an intro. I put it into this platform and it just makes it better.
It wordsmiths it for you.
Really nice. And it's like having a smart writing buddy.
Yeah, that's awesome.
So I'll forward you the interview I did that was totally centered on this, but it's really powerful.
Yeah, I'll check it out. It sounds awesome.
Okay, cool. Well, let's get into mortgage coach. So first of all, why are you a mortgage coach?
So I've been in the business about 20 years. The first 10 years I was a processor and in ops, and during that time I worked for some awesome loan officers and some bad ones. And I remember one was part of was by referral only, Joe Stump stuff. A couple of them were in Loan Toolbox, and I just remembered when I went on my own, I knew who I wanted to copy and who I didn't. And the ones I wanted to copy were the advisors, were the ones that were educating their clients and really helping them, and that's just who I wanted to be. So when I went on my own, I started looking at, I knew I had to have a database. So I signed up for I think it was Velma. They had like a newsletter that would go out.
Right.
And then as soon as I saw your platform, I was like, this is it. I started using your platform probably 9 years ago, 10 years ago, I don't even know. But I've been blowing people away, clients away with it since I started using it. And I'm surprised it's not used by everybody at this point. There are a couple others in my market using it now, and even then I'm kind of like, oh, okay, that kind of takes away a little bit of an edge that I thought I had, but it's still so powerful, it doesn't matter. But at the end of the day, as long as I've been using it and as long as people have been saying his technology is awesome, I love this presentation, I'm still shocked that everybody in my market's not on it. But
Well,
hey,
we have grown, but we got a long way to go.
yeah,
But to your point, we're a paintbrush and a canvas. As a mortgage professional, you're the artist. I mean, you're the one asking the family questions, then putting together mortgage options, and then mortgage coach is just
it
the most
presents it in a
premium way to deliver it.
it delivers it in a very digestible way for the common person or for the engineer. And some other platforms only tailored to like the engineers are a little bit overwhelming. Where
Yeah.
yours is, I think, just digestible by anybody, especially when you couple it with a video walkthrough and all of
Well,
that.
that's what we try
It's
to do.
awesome.
We try to make a platform that has something for every consumer. It's not too complex. It's not too simple. It starts off really simple and it can get very complex.
Yep.
Hey, by the way, I'm feeling like I'm in the big chair and you're in the small chair. Any chance you could move your monitor down just a little bit? There you go. I probably should have done that before we started.
Let me raise my chair up. There we
Yeah. Anyways, it was really doing it for you, bro. I'm like, you. All right. So that's your why. We got your tech. Guys, if you have questions, whether you're watching this on YouTube or you're watching this on Facebook, put your questions down below and we'll get to them. I'm going to go check. So we got a couple folks. So Scott Groves just commented out some nice things. Anthony Casa just said great content. Thanks, Justin. Guys, if you have questions, put them down there. We'll get to it.
Scott Grove texts me all the time, giving me a hard time about my TikToks where I'm dancing around and stuff.
Yeah, he's such a cool dude. I really like his content. He's pretty damn funny on social.
Yeah, he's awesome.
Yeah. All right. So let's get into some specific strategies. You mentioned to me via email when we scheduled this is that Mortgage Coach is actually the engine and the inspiration behind a lot of your social posts. Could you describe that, unpack that a little bit for us?
Yeah, because I've been using the reinvestment strategy for a while, the tax benefits. And in the past, I would use the reinvestment strategy and kind of plug in like, oh, you can put 6% here, 4% here. Here's what it does. So, just educating clients on here's other options besides putting your money into your mortgage, or here's what you could do with your tax benefit every year, kind of like that. But as I honestly went on a personal finance journey of my own, I got divorced 6 years ago or so and ended up with not much, and being a high six-figure earner for a long time and not having much in after the divorce was a real wake-up call for me that I got to get my act together. Thankfully I owned a couple properties and had some things to salvage, but I really dove all in, because I've had clients that make 60, 70,000 a year. They're in their 50s and 60s and they got 1.7 in the bank. They own a duplex that they don't pay any money on that's worth 1.5 in Pasadena, and they don't have to work anymore, and then I see high six-figure earners that are paycheck to paycheck like I felt like I was at that point. And so I went all in on, I really, I had a financial advisor, I had CPAs, I have these people telling me stuff, but I wanted to learn this myself and figure out how can I make money as quick as possible, because I've been going about this all wrong. So throughout that journey, books and coaching and
Any
courses.
books, like top 3 favorite books that helped with you, that were part of your fiscal literacy journey?
Yeah. So Rich Dad Poor Dad, I had always heard about and figured it, oh, it probably has basic concepts. It was just a powerful book. It just really opened my eyes to, I'm doing this wrong. Um, and then another one was I Will Teach You to Be Rich, I think, from I forgot the guy's name, something Ramini. I forgot. I Will Teach You to Be Rich. If you Google it, it'll pop up. And then the Incredible Shrinking Alpha. Those are three
Hmm.
awesome books that will talk to you a lot about investing, how it's not as complicated as you think it is, and how you have historical data, 100 years of data that shows you what you could expect from our market. And it's just really good stuff. So as I dove into that for myself,
Real quick before you jump off that, I want to, Dan Keller, who's someone who's also invested a lot of time and money in his personal growth. He posted literally yesterday
yeah,
his top books, and he had, I just want to make sure the audience gets these.
yeah,
Think and Grow Rich, Rich Dad Poor Dad, Tony Robbins Unshakable, High Performance Habits by Brendan Bouchard, Tony Robbins Money, and Dave Ramsey, which one? Total Money Makeover. So one point I want you guys to all get, you just heard from one badass mortgage professional that's been doing this for a long time. Sounds like he spent the first 14 years learning how to make a lot of money.
yeah,
But he spent the last 6 years how to make it, how to keep it, and then how to turn that into a value prop. And Dan Keller did. So Mortgage Coach, tell me if you agree with this. When you think of these books, they're critical and they're important and you learned, but when you're actually an advisor and you're using Mortgage Coach, and every time you meet a customer, you're like doing a financial makeover with a TCA, like it's the best book of all.
yeah.
Would you agree with that?
Yeah, by all means. When I show them the power of what their money could do for them, and when I explain to them and educate them on things we don't learn in school, look, here's leverage, here's how it works. You have a 3% debt here, or a 3%, you know, mortgage that is an appreciating asset. Your home goes up in value, and this thing's costing you 3%, but the market historically performs around 10%, right? And that's index funds. You could just buy those and let your money grow there. And it's going to outperform the savings you would have on your mortgage. And there's it's just having that conversation, at least letting them know their options, opening their eyes to what's possible. Everybody's goals are different, everybody's risk tolerances are different, but I feel like when you're young, you should be going into the market, you should be investing in index funds, you should be putting money away and not trying to pay off your mortgage. That's my opinion. I don't think you should ever like tap into your mortgage to go buy toys and fun stuff, but at the same time, like, if you're trying to retire in the next 10 years, then yeah, by all means. If you're filling all your other buckets in life, your retirement accounts, you're investing, you're saving, and you have extra because you're a high income earner to still chip away at your mortgage, then go for it. I'm doing that.
Yeah, well, and I think you were challenging a Dave Ramsey philosophy,
Yeah.
and my philosophy, guys. I've interviewed Dave Ramsey. You can check it out in the Mortgage Coach YouTube channel. I've also interviewed Rick Edelman, who would say get the biggest mortgage you can and invest the difference. And my message is, first of all, they're both great books. They're both great mentors, and you need to figure out what's right for you.
Yeah.
And I do align. Like I do think the sooner you can buy a home, the better. Dave Ramsey would say, hey, put it off until X, Y, and Z. Like if you could buy a home, like get into the game as soon as you possibly can. But any mortgage professional listening to this, to be fiscally literate, to give families advice over price will be life-changing for you. Like
Yeah.
I don't meet loan officers that aren't incredibly fiscally literate. They've read the right books. They're using a TCA all the time, that are not at a really high level of success. Like it's the fastest way to be successful. So anyways, keep going.
Yeah, no, I was actually going to mention when you were saying, about buying a home, your housing is your biggest expense, the biggest one any of us are ever going to have, right? And there's an influencer couple that I've met and done like some cross posting with on social media, who they're young and they're paying off about 200 grand in student loan debt in I think 3 years, because they bought a duplex, they live in one, rent out the other, have no housing payment. And if they would have listened to Dave Ramsey, they would have spent the next 10 years or more trying to pay off that student loan. But because instead they went the route of trying to find a property where they could live and not have a housing expense and Scott Groves says he hates house hacking, but I love it. By house hacking, they've now got rid of their biggest expense. They're getting rid of that student loan debt, and they're going to free themselves up for so much more in their lives. And it's an awesome story. They actually did a podcast on Bigger Pockets. But um, I again, Dave Ramsey has some great stuff, but there's certain things I firmly believe in about, making your money make money for you, and leveraging, assets like a mortgage to take you
Absolutely.
further in life.
Yeah, and I interviewed Cody Touche a few months ago. He's one of the top producers in Seattle. He owns over 100 doors. Part of his unique value prop is investing in real estate, and his advice is the soonest possible. Even if you're in college,
Yep.
get a duplex, get a fourplex.
Yeah,
A fourplex doesn't make as much sense in every market as a duplex,
sure.
but your first house should be a fourplex or a duplex, and then he gives some advice. So great advice. It sounds like you align with that. So talk about how are you like, give an example of a TCA that turned into a social post, or where there was a social post, but some of the concepts were powered by a TCA.
So it all started with the TCAs because I was using the reinvestment strategies. And once I started feeling confident about talking to people about the market and index funds, and I started saying, look, this is performs at 10%. Let's plug in 8% here to be conservative. Look at, this mortgage that if you would have done a 15-year fixed on, instead you do a 30-year fixed, but put the difference here, and just for 15 years save it, you'll have more than enough to pay off the mortgage and then some. Like, there's just some powerful things I saw by playing with those numbers on my TCAs and doing my appointments with clients, right? And so I already knew those concepts. And then once I started doing the social media stuff, I just went back to stuff I had already seen by playing with the reinvestment strategies and mortgage coach and the TCAs. And as I, whenever I need to run numbers to post actual numbers and figures, I just jump in the mortgage coach and start running it from there.
Got
So
it.
it lets you like sample like a biweekly payment, reinvesting the difference back into your mortgage, or reinvesting it into a savings account with a certain, investment rate. Like, I love that the platform lets me do that, because that's where I get all that data from, and that's where I learned it from.
So let's do two types of TCAs. Let's do one just purchase, because I mean you're doing these. It looks like for you and your team are making sure every family gets a TCA, whether it's automated or whether it's manually created. And my guess is, just looking at your usage, you're probably doing a lot of your refis at a Jungo. And so you're using the Jungo integration to your refis, and you're doing purchases. Hey, they just came in. Let's put in a purchase. So it's kind of like, and I'm not saying this is best practice, guys, because if you have the Optimal Blue integration, you should, be using that as your front end for purchases and refis. If you're using the Total Expert integration, it automatically creates a total cost analysis. We also have a lot of lenders that have created proprietary integrations that will do everything from automated TCA and do an annual review automatically for all your customers. And then, of course, the HomeBot, where the consumer is in the HomeBot app, and when they say, I want options, it creates a TCA, which you have that turned on, right?
Yeah, correct.
Okay. So let's do a purchase. Walk us through a sample TCA, show your screen. I want to find out, one, what is your scripting like? What do you say to the family to pre-frame it? So when they see it, they're like, wow, what is your pre-framing?
So I have a team. I don't do many pre-approval presentations or presentations at all anymore. I have junior LOs and stuff, but the preface when we meet with the client, we go over their credit report with them. We go over how kind of the bond market works, just so they have an idea. Look, rates change every day. Here's a bond chart. And then we jump into, okay, we're going to show you some breakdowns and options. And it just creates a lot of transparency is really what I like about it. So here's a purchase. And basically this gentleman, we just showed him with points and without points. He's in contract on a property, and, hey, what are my options here? So we show them the monthly payment difference, and, here's the long-term cost, the short-term costs, or the long-term savings, short-term savings. We walk them through a breakdown of, here's your payment breakdown. Here's your closing cost breakdown. And we line by line it with them. Here's an estimate of everything you could expect. And then we just go over their goals. Are you planning on being here for a long time? This gentleman is. So for him, I'm not going anywhere. I'd rather, take the lower rate and pay points, or whatever the case may be. So we just talk them through that. And if we need to show them a reinvestment strategy with some of this stuff, we'll go that route.
Got it. So you're doing payment options. And I find a lot of mortgage coaches when it comes to purchases, they'll start with, you know, low rate, high cost. Often they'll do three options. They'll kind of do highest rate, lowest cost, and they'll do three so that they're getting the consumer to
Yeah.
purchase or to shop on their platform.
And what we do is we at pre-approval, we'll do this with different price points and things like that, LPMI, with monthly PMI, whatever, right? We'll do that. But then once they open contract, by then we kind of have a better idea of what their goals are. And then we customize this with specific property info and prices at that point. So this one's actually, they just opened contract. So this one got narrowed down to, okay, you want a 30-year, you want to see with points or without points, right? So a lot of times we don't even like to call it points. We just tell them, look, here's your cash to close, here's your rate, here's your cash to close, here's your rate. The difference is, the lower the rate, the higher the cost is going to be. The higher the rate, the lower the cost is going to be. So we just dive into that there.
What about one of the most common TCA strategies? And by the way, guys, TCA stands for total cost analysis, is showing single premium MI and showing a lot of families are either concerned about an appraisal gap. And, because in order to win, they're having to make an offer beyond the price in many cases. And they're either concerned about it or it actually happens. Are you using the TCA to get them to make the bigger offer and help them have confidence and clarity?
Yeah, definitely. We're giving them the options with LPMI or single premium, or if we need to, adjust sometimes. Yeah, what happens if the value comes in short? What does that do? And it's like, well, here, look, it'll change your payment $140 a month or $60 a month or whatever it is. Because sometimes it's not as dramatic as they think of the change it has by the value coming in short. So we'll walk them through those options for sure as it comes up to try and problem solve and show them strategies that it's okay. We could still close this.
So anyone new, listen to this, 34% of loan officers that do over 100 loans a year use Mortgage Coach. And in today's market, it's never been more valuable because consumers, whether they're renting and they're having to buy a home and pay over offer price, they're concerned. So using the total cost analysis to give them clarity and confidence has more value in this market than it ever has. Would you agree with that?
Yeah, definitely. Definitely. And I love it for the refi ones too, because let me show you my refi one. Clients are always, a lot of hesitation I get from clients on refinancing is they don't want to start their loan over. And they don't realize, well, you could do, shorter term, custom term. We could do 27-year fixed. And they always love that. So it looks like on this one, we took the current loan. Here's a 25, a 20, and a 15. This is where we'll usually say, look, instead of a 15-year fixed versus a 25-year, I would recommend the 25 as long as you're still, not going to be retiring for the next 20 years or so. And if you reinvest this difference of, 200 and something a month between the payments here, here's what it would do, right? And we jump into the reinvestment strategy and show them stuff like that. So the one of the things is I am training my team more and more. I am having them take personal finance courses and their literacy with all this stuff grows as well. So they're more confident talking to clients about this in addition to me, which just makes us that much stronger of a team.
An advisor culture. I love that, guys.
Yeah, definitely.
I'm actually, we've got this, Todd Bookspan has this modern mortgage and modern real estate summit. And we've got a lot of scripts in that, but we're going to start putting more fiscal literacy sessions because I do think that's where it's at. Well, let's go to your IG account. Like, how did you get 30,000 followers or 29,000 followers?
Yeah. So my first I did a coaching session with somebody on social media and they were talking about your target audience, who are you after? And a lot of times, a lot of people are broad, like, oh, first time home buyer. And they really had me narrow down, like, how old, what's the age range? What are their hobbies? Where do they work? What's their income? Like I had to really get fine tuned about my target audience. And then once you really, really know exactly who your target audience is down to where you could name them and see them visually, then you could start thinking about, well, what does this person want in life? Like what problem do they have that I could solve? And I just remember my own struggle being in my early 30s and having nothing and trying to figure out where do I go from here to set myself up from the future? Because I don't feel like I've done a good job. I feel like a lot of people are in that place when they're in their early 20s, late 20s, as they're starting a family, as they're starting to make money in their career. It's like, well, should I buy a house? Should I use my company 401k? What is, they start wanting to know, how do I set myself up for my future? So I was like, you know what? I'm going to start putting in some mortgage strategy stuff in here to just show I think a little different than other loan officers. Because in my head, I was like, nobody wants to follow a mortgage guy on social media. Oh, here's a market update, here's rates. Sometimes that stuff kind of is cool. People want to see it, but if that's all you're doing, it's just, I think it's hard to build an audience like that. So I just started like, okay, I'm going to try and like approach mortgages with a little bit different strategy here and there. And I'm going to start talking about personal finance stuff. And honestly, at first I was scared to put personal finance stuff out there on like investing strategies and buying rental properties, because I was afraid of, maybe I'm wrong about some of these things, or people might not believe it and they might attack me and tell me I'm wrong. And, I'm not a licensed financial advisor, all that stuff. Right. And I read another book. I think it's Your Next 5 Moves. And in that book, it was talking about people like Dave Ramsey and that guy, Jim Cramer or whatever from Mad Money, and how these guys, look, Jim, he lost his license and people still follow him, for investing advice. And like, people hate him or they love him. And it was like, you know what? Just speak your mind. Who cares? Just be confident about what you're saying, speak your mind, and people will gravitate to you and people will gravitate away from you, but they will all watch you. So that's when I was like, if you watch my videos, I'm not like screaming and like, this is how you do it. I'm not doing all that. I probably might evolve into that as I keep finding my voice. And I guarantee you, if I do that, it'll probably grow my presence even more. But that just was like, you know what? Fine. I'm going to start talking about this stuff. I'm going to start putting it out there. Let's see how it goes. And it's been going great. So
Yeah,
it's been
no,
resonating.
no doubt. Well, I like your tagline, leveraging and investing your way to financial freedom. And I always talk to mortgage professionals, guys, you got to go beyond the transaction. Like saying I close loans in 10 days and I have great rates. That's blah, 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 blah. That is the mortgage guy. And you will not WACD your business. What does that stand for? What Amazon can't do. If you want to do what Amazon can't do, you got to go beyond the transaction. You got to be an advisor, and leveraging and investing your way to financial freedom. A good loan officer, a good mortgage coach can do that. Real quick, because I know we got to wrap it up. I want to be respectful of your time. But is there one post that outpulled the others, or one concept that's like, guys, everybody needs this in their YouTube channel, and everybody needs this one in their IG account if you're in the mortgage business? Anything come to mind?
So my biggest one that went viral, that was about custodial Roths for kids. So I don't know how well that's going to work for everybody if they're trying to grow, mortgage stuff. But talking about biweekly payments, flipping it around, saying, hey, that might not be the best use of your money. Here's some other options, right? Just different angles. I'm always looking for content. And honestly, you could go on TikTok and on Instagram and just search other mortgage people, other personal finance people, and just look at what worked for them. Look at what got a lot of views, what got a lot of attention, and see if it's something that you could, reframe or paraphrase or put it in your own words. The main thing is just make sure you're talking about stuff that you're confident in, and that you believe in.
And how big is TikTok for you?
I got like 60 something thousand followers on there.
Boom. And you're getting business. You're getting leads from both Instagram and TikTok.
I am. I'm getting leads. I'm getting a few pre-approvals a week, which is it's all good. It's fun stuff.
So one last question came in from Kevin a few minutes ago, and he said, "Do you feel do you have to be perfect when you're doing a video, letting your natural self shine through?" So I guess he's just acted like how polished do your videos need to be, in your opinion?
Not at all. They don't need to be polished at all. If you look at my beginning ones, I was in my gym in my garage with like a sleeveless shirt, just like, screw it, I'm going to be myself and let's see how this goes. Because the stuff I was reading was be yourself, because then you'll attract people that would normally be, you'll attract like-minded people. So yeah, just be yourself. Like, my stuff's getting more and more polished. I got a nice mic now a couple of weeks ago, things like that. But believe me, it doesn't need to be polished at all. Just do it and fix it later. Get out of your own way for the most part and just do it.
And I asked Brendan Kane that same question. I mean, this is a guy who built 1 million followers in 30 days, who built the first website for Taylor Swift, who helps Rihanna. You know, he's one of the top social media consultants on planet Earth. And he's like, it doesn't matter. I mean, like some of the most followed viral scroll stopping videos aren't necessarily the most polished. Now, guys, as a professional, the mic matters most. So the quality of the sound. But heck, if it's got a great headline and it's a good topic, it'll be scroll stopping. And if you can hear it and you can understand it and it's valuable to you or it's humorous to you, people will consume it. So quality does matter, but it's absolutely not everything. Ideas are everything, and action is everything.
Yep.
So closing thoughts, any final words for the
make sure
community?
Check out my stuff. It's at loans by JB or at loans by JB is my Instagram, my Twitter, my YouTube, all of it. Give me a subscribe, give me a follow, check it out. You guys can see what I'm doing and run with it. You know, whatever ideas you get, have fun with it.
And guys, be a mortgage coach. Like if you are not providing every single family a total cost analysis, you should. Not only will it improve your conversion, not only will it improve your referrals, it'll make you smarter, better. And now here from Justin, it'll give you ideas and stories for social media. So get after it. Dude, I appreciate you, man.
Thank you, man. It's been
Take
fun.
care, everybody. Have a great day.